Hello and welcome to Big Deal. I'm Nisha Poddar. Now it's the return of M&A deals in a big way, with cement consolidation intensifying and healthcare transactions increase. And many other sectors are now gearing up for deals as the market euphoria continues and the corporate confidence really returns. Let's talk deals with ace investment banker Manisha Girotra, who heads Moelis in India. And Manisha, welcome to CNBC-TV18. Always a pleasure to welcome you on my show. Now, Moelis advised on the recent Mankind Bharat Serum deal. Let's begin with the M&A transactions, and I'm trying to capture this particular, trend which is now picking up, because in this particular week we have seen two large M&A deals being struck and announced. You have been part of one of them. How is deal-making scenario looking to begin with?
Thank you, Nisha. Thanks for having me. As you said, the deal-making scenario is looking pretty upbeat. We are seeing investors, both private equity and strategics, compete for key assets, especially in segments such as pharma and technology, healthcare services. Earlier in the year, we demerged the Aster business, Middle East business, and you saw the kind of re-rating the investors did for that hospital chain. So a lot of excitement with the investors. I think till about 5-7 years ago, you saw most of the activity happen only in the tech sector, as India dominated and became the office of the world. But I think now investors are wanting to invest in India for India, not just for Indian capabilities for the world, but because the market is so strong. We have this large urban middle class, we have large purchasing power, and hence investors, both domestic and international, are wanting to get their share of that market.
That's right, Manisha, and great that no conversations these days happen without being talked about the private equity participation when it comes to the deal scenario. And we have seen PE players really take a larger share of the M&A pie in the last few years. And of course, their exits have also become on the blocks, and that's what we have seen in the last 2 years, which has put pressure on M&A. But coming back to M&A returning, how do you see the large conglomerates, the big corporate houses with their animal spirits now coming back to the market? Because, the way the cement consolidation is also going on, it's going to be a very hectic and competitive affair between two conglomerates now.
Sure, Nisha. As you rightly said, the animal spirits are back. The last 10 years, the only transactions we saw in the domestic market were the ones which were forced by the bankruptcy law and the ones where the banks led the whole process. It's not the case anymore. The large conglomerates with deleveraged balance sheets and with ample cash on the balance sheets are wanting to consolidate their share in this very rapidly growing economy. So we saw that in the telecom sector in the past. We now have just 3 players, 3 strong, deep-pocketed players. We saw this recently in the entertainment sector with the Reliance Disney $9 billion merger. And now, as you rightly said, we're seeing it in the cement sector. The entry of Adani really has shaken up this sector, and I think the large players are wanting to consolidate their market share. There's a lot of rapid growth expected in this sector, just given what's happening in both the manufacturing sector and the infrastructure sector. The government spent about $2 trillion in the last decade in infrastructure, and cement, as you know, plays a critical role in that segment. So the large players are seeing a huge opportunity now and are rushing to consolidate their share. We saw the consolidation happen in East and West before, and now, as you rightly alluded, we're seeing the same happen in South, where the large players with their large balance sheets, operating efficiencies, economies of scale, are just managing to squeeze out the smaller players.
That's right. And the consolidation in the cement sector, and also you mentioned the kind of euphoria we are going to see because of the infrastructure. And that's why Aditya Birla Group also entered the paint space, where the space is now going to get competitive. But let's talk about another sector, which I think we have seen most amount of deals struck in that particular space is the healthcare space after COVID. You struck one transaction just recently, and there are at least 4 transactions which are waiting to happen. It's a large space. So give us a sense on the healthcare deals in particular.
Sure, Nisha. So if you step back, it's the same thesis in this segment too, that as we have a 400 million urban middle class, they want access to better quality services. They want better healthcare for their family. They want better discretionary consumer spending. And as a result, the pharma companies and the healthcare hospital segment is benefiting enormously from that. Again, governance in this segment is very high. A lot of these companies are set up by first-generation entrepreneurs, and private equity is finding very good talent and professional management, much like they did in the IT sector before, and wanting to make a play in control deals in this sector. So earlier in the year, we sold a company called Healthium to KKR, which was an Apex company. 1 out of 5 medical devices used in any surgery are manufactured by Healthium, a huge testament to India's made in India progress. So, KKR came and won that asset in a very competitive process. Similarly, as you said, recently announced Mankind Bharat Serum transaction. And I think the positive trend here that you're seeing also is that Indian strategics are competing with financial sponsors and the global deep pockets to try and win these assets because of the huge size of the market opportunity. And they are being able to raise the adequate amount of capital to come and fight for these assets. So it's a good time to be in this segment. The healthcare segment started with Max Hospitals. If you remember, Max was owned by KKR. They then monetized their stake in the public markets. And after that, you've seen a sling of opportunities in the healthcare sector, IHH, Aster, the merger. So in both healthcare services as well as pharmaceutical companies, we continue to see expected activity, both from financial sponsors and Indian strategics.
That's right. In fact, lots more healthcare deals in the making. So JB Chem is another one, and also HCG is another one. That particular transaction is going on. What do you think about the hospital transactions, Manisha? We have seen quite a bit of that and the investor interest also in it. But the market, the equity market valuation, as well as in some of the cases, probably the promoters wanting to stick around while the private equity investors looking for a complete control transaction. Are these now becoming the new impediments to the conversion of deals going forward?
So nothing new. I think any M&A, you have to balance a few priorities, whether it's of the promoter or of the private equity. So you need to balance them. The good thing, Nisha, as you rightly said, is that today you don't have to basically look just for a private solution. The public markets are willing to offer the solution. As I said, the Max entire exit by KKR happened in the public markets. The public markets are showing huge depth. Domestic HNI investors and domestic retail investors are lapping up high corporate governance companies owned by private equity in a big way. So there are multiple solutions today. And I think the fact that there is a public market solution is very heartening because it helps us attract more capital from international private equity, because today you can confidently say to a global player that $1 billion to $2 billion solution can be easily found in the public markets in India, either through an IPO or block deals.
That's right. In fact, that is one of the biggest takeaways and biggest positives that have come in for the private equity space in India because of the exit on the equity platform and with the depth that the Indian market is providing. But Manisha, how is private equity action looking? Because last 2 years were a lot of clean out trades. Now they are looking for smaller acquisitions in the sectors uncharted or sectors of the future. But the equity market valuations are making deal conversions more difficult, especially for the investor class, not as much for strategics. How are you seeing this particular scenario play out for the rest of the year?
So I think the public markets will continue to be robust. You're seeing the kind of IPO deal activity. You're seeing the kind of regulation improvement that SEBI is doing to attract more capital through the IPO route. I think that will continue. And I think that's great because what it is doing is what it has done for the last 6 months and will continue to do for the next 12 to 18 is to give great exits to the private equity investors who invested in these companies, public and private. A lot of them going through the IPO route, a lot of them basically monetizing through the blocks. And I think private equity, if you speak to any of them, the international and domestic ones are really focused on monetizing their stake through the public market route. So that's a positive, as I said, Nisha, before, because all it does, it encourages everyone to look at investing in larger sizes when they come back to invest, because the exits are so much simpler.
That's right. Exit has been the momentum play for the private equity. But Manisha, what is the outlook on private equity investments as you see at the current moment?
So, Nisha, I see a positive momentum. I think India is seeing the bulk of private equity capital that is being deployed globally. A large part of it is coming into India, and not just in the private equity space, but also in other segments such as infrastructure. You're seeing the sovereign wealth funds like Brookfield, CPPIB come in and invest in infrastructure segments. So I think India remains really high on the radar screen, given our GDP rates, given our good governance, given that the government is seen as a strong ally today to private sector. Manufacturing is showing resilience. When I speak to private equity, I think the sectors that are of interest to them, the first one is what you mentioned, which is really healthcare and pharma. It's top of the mind for everyone. Tech, IT services, as well as tech companies continue to attract capital. Financial services, which is really a play on the Indian GDP, is another sector which is attracting capital. Infrastructure, you see some of the sovereign wealth funds coming in, maybe a couple of the other funds such as KKR, etc. But infrastructure generally we are seeing has become more of a play for the domestic large strategics.
That's right, Manisha. And very recently, some of the private equity players have also started talking about manufacturing and industrials also. And these are the real capital-intensive sectors which need the growth capital to be fueled by the investor class. And a lot of them have been deploying more into India from this particular year as well. So, Manisha, hold on to your thoughts. Lots more to discuss on other sectors which are in the play and the outlook on M&A for the coming year. And that's after a very short break on Big Deal. Stay tuned.